Question about consolidating trading platforms. I dumped a bunch of money into a few ETFs using self-wealth between 2021 and 2023. Trading fees is $9.50 a trade, which was fine at the time as the amount I was investing with larger lump sums. As of last year, I started using CMC as it has $0 trades up to $1,000 a day, and so allows me to invest $250 a fortnight. I invest in the same ETFs I have in self-wealth as well as some others. Is there any real benefit in bringing the self-wealth shares over to CMC? I know there's fees to move HINs, but neither have ongoing fees. Seems like the best option is to just use a platform like ShareSite to get a good overview of it all until I'm ready to actually sell any of the shares, but would like to check, does anyone recommend any different platforms for any reason? Thanks.
You use CMC, don't you?
I do. I was just thinking about that.
And weirdly, they reached out and wanted to buy some ads on this show, so I haven't heard back from them. Maybe there will be some ads. I've got the view where if I don't use it personally and it doesn't do any harm and it would suit some people, I'll take ad money.
Yeah. I mean, some people, and undoubtedly, Jonathan gets into this more than I do, but it's suffice for me, but depends what you want to get out of it.
Yeah, so what we need to understand is with share brokerage accounts, which your individual HIN is attached to the ASX CHESS system, I think the ASX, and people can fact check me in the YouTube comments, I think the ASX charged $2 to settle a trade or something like that.
Right.
So we know inherently, so we've done ads for ComSec. Again, different broker. I think they charge $20 a trade.
Yeah.
Self-wealth charge $9.50 a trade. CMC, at the time of me reading this from Jonathan, his words, I don't know if it's fact or not, probably is true, $0 trades up to $1,000 a day. So that allows him to invest $250 a fortnight. What I think you need to look at is, number one, CMC are probably just copying that as a loss-leading marketing thing. We're just going to pay for trades. Same with, I think BetaShares Direct don't charge for trades.
Right.
It's a bigger issue about how you want to handle your wealth. I personally don't have any of my wealth on a traditional broker like your self-wealth. I've used to be a self-wealth customer. I used to be a ComTech Trust customer. CMC, I probably used to be one by default because I think they took over ANZ E-Trade. Not sure.
Yeah.
I mean, I've tried everything.
CMC took over ANZ.
Yeah, that's right.
Yeah,
E-Trade moved into.
I got you. Yeah.
So E-Trade, I think, was an American thing, and ANZ in Australia had the Australian.
Regardless of fees and whatever else, and there may be a difference, may not be, but are we just piling it into one app and just staying there? Or?
Well, yes, but obviously there's the bigger thing that enters the chat here about your record keeping. He's using options like ShareSite. So for me, I don't have any of my current equity holdings on a CHESS-sponsored broker.
Right.
I literally like consolidated reporting, so I don't have to plug in ShareSites of the world and Navexes and all that stuff. It's just done. The brokerage, I don't think brokerage is a big deal in the world. It could be for some people. A way around it could be saving up your parcels and do the analysis with, instead of doing $250 a fortnight, you might do it, if you wanted to stay with self-wealth because you like them, if it's per trade, you might do it once a month. Over a 10-year period, doesn't matter.
Yeah.
So pick the platform or broker that you like in terms of the user interface, the vibe factor. If Jonathan is dying on the chess hill, awesome. You've just got to obviously track and plug in ShareSite to keep your trade and dividend reinvesting and all your cost bases in order. So a lot of people get hung up in what do I use to buy, where the bigger question is what you buy is more important than how you buy it.
Yes.
So like, for
Much better.
example, we don't know this, but I'm just making conversation. Jonathan could be buying every single week the crappest ETF in the world. Well, it doesn't matter if you're buying it through Self-Wealth or CMC.
Or your
the
brokerage
investments,
is $9 or $2.
yeah, or it's on platform and it's got consolidated reporting. If the underlying investment sucks, well, you're out of luck anyway.
Yeah.
But I will say, just when you are comparing
Yeah.
platforms and so if you look at CMC, Self-Wealth, Perla, I think Moomoo's now Chess sponsored, Webull, I'm not sure. All of these different things, brokerage accounts, usually the hand that giveth will also be the hand that taketh, all that stuff, right?
Yeah.
For example, I'm pretty sure, and again, fact check me on this, CommSec cash account on their brokerage platform will pass on interest to you if you've got cash sitting there waiting.
Around, yeah.
But like Perla won't.
Right.
So it could be, I'm not sure if Self-Wealth or not. So it could be, yes, the hand that giveth you cheap trades will taketh with any interest that they don't pay you.
Yeah. I'm just looking at two there that I've got, and I think in a lot of this we're clutching at straws. Like, you're right, it's what we're investing in that probably is the major focus, isn't it?
Yeah. So, yes, the CommSec Commonwealth Direct Investment Account, referred to as the Cash Hub, does pay interest on positive balances. Yep. So now I'll do Concept, we'll do CMC. Does the CMC Cash Hub pay interest? Oh no, that's the UK. At the end of the day, nothing's for free. You're paying somehow.
Yeah.
It's as simple as that.
Yeah.
Standard CMC investment accounts do not pay interest on cash balances. So we know that with, again, this is where it's different.
Yeah.
CMC, it appears, again, I'm happy to fact check this. So the CMC doesn't. Let's check Perla. No, the Perla one doesn't pay interest. So
CommSec does.
CommSec does. And probably I think NAB Trade does as well. But they're paying a higher interest rate.
Yeah.
But if you've got significant money sitting on cash ready to trade or whatever, that becomes material.
Yeah.
But it doesn't matter how you invest. We're just pumped that you're investing regularly.
Yeah.
And we're pumped that you're looking at this stuff. But at the end of the day, it doesn't really matter because any brokerage that you do pay, it's like stamp duty on a property, John. When you go to sell, the brokerage gets added to the cost base. So it's not a tax deduction on the fly. It gets added to the cost base.
Yeah.
So any buying or selling brokerage. So that means everyone, if you bought a $5,000 parcel of CBA shares once off and they charge you $20 in and $20 out, that gives us $4,980 net. When we go to – no, that's 60, 70 – is that right?
$40 trade.
Yeah, sorry, that's $49.60 is the net wash up because we've spent $40 on brokerage. If that over time, that single parcel doubles to $10,000, when they say it grew from $5,000 to $10,000, so you've got a $5,000 capital gain, it's worked out to be it grew from $5,040 to $10,000. So it's the cost base increases. So again, all this doesn't matter. Pick one, keep investing. Hey, it's Glenn here. Thank you so much for watching today's video. You made it to the end. Can I ask a favor? Can you hit that like button and maybe hit subscribe if you want to get notified when we release further videos just like this one, whether you watch the Money podcast or Retire Right. And remember, if you want to learn more about investing, I've got an investing book, The Quick Start Guide to Investing, And there's a link in the description to get your hands on a copy. Thank you so much. Bye.